Ladies and gentlemen, welcome to the Walk Show podcast, where we explore the walk of life. This is your host, Walker Neer. We continue to reach new milestones with the Walk Show. The show's been listened to all over the United States and in over 40 countries around the world. I greatly appreciate your continued listenership and ask that you continue to share the show with your friends. The only real promotion the show gets is actually that of the word-of-mouth sharing, so it really does go a long way, and it really does mean a lot. As always, the music for today's show is provided by Misha Zarin, so thank you very much, Misha. Last week on the show, we heard from Dakota Grady, who talked about the importance of budgeting to take control of your personal finances. Another significant tool in being financially secure is investing. There are many ways and places that one can invest, but perhaps one of the newest is actually cryptocurrency. We're joined today all the way from the United Kingdom by Luke Appleton, who hosts the YouTube channel 10X Nation. Luke is actually a full-time investor and trader who started his YouTube channel in late 2019 to start promoting grounded investment information on his channel. Note that I said information and not advice. Luke is not trying to advocate that, you should make this trade on this day or that trade on that day or anything like that, and instead is really just trying to help people understand the basics of investing. Luke also teaches about stocks and equities in addition to cryptocurrency. There unfortunately is a lot of snake oil in the world of financial advice, but Luke is incredibly earnest in his messaging, which is, of course, very important to me. While Luke trades himself, he actually suggests that the vast majority of people focus on long-term passive investing instead of trying to engage in constant trades, as that's really where the significant risk comes in. I really enjoyed the conversation with Luke, and I have been watching his YouTube channel as it really does break down and explain plainly a lot of information about investing. So I really encourage you to check out 10X Nation, his YouTube channel. But yeah, without further ado, let's get on to the conversation with Luke. Welcome to the Walk Show podcast. Luke Appleton from 10X Nation. Thank you so much for joining us.
Thank you, Walker. A pleasure to be on.
Yeah, man. So I actually was introduced to you kind of through a friend of mine who's been on the show many times. Chris Crabtree is his name. But he has in the last few months started kind of dabbling in trading in stocks and then also with some cryptocurrencies. And he had discovered your channel on YouTube. Something that's really important to what I do here with the Walk Show is trying to discuss ideas and explore ideas, really whatever they may be, but keeping it grounded and earnest and not making it sensationalized. And that's what Crabtree and then he showed me your videos, and I've watched some of them as well. And that's what we both kind of took away from your videos, is that especially when it comes to the stock market and stuff, for laymen like ourselves, it can be kind of intimidating to learn about, and it can feel like you're dealing with like snake oil salesmen, if you know what I mean.
Yeah,
like people that are overhyping things. And I'm not trying to flatter you too much, but my point just being that the reason that I was excited to have the opportunity to talk to you is that I think that your content is very grounded and very earnest. And it doesn't feel like you're pushing, you don't constantly refer back to, and if you buy my book, you can find out, you know what I mean? There's none of that. But anyway, so really cool content. So why don't you kind of explain to the audience, who is Luke Appleton and why do you have the YouTube channel that you do talking about trading and investing?
Yeah, well, I like how you went down the path of, like, in a way, I want to try and make my content as natural as possible, and I want to get my personality, because I think that's really important. And I feel like with these type of markets, it's a very robotic market, and by getting my personality into my content, I hope it can make it more enjoyable to watch and make the content more understanding, because you did touch on it is a very complex topic, especially going into the world of cryptography, which I would not consider myself nearly an expert in. And I mean that there is some going into the real under the hood of what Bitcoin is. It's a really very complex system and a very complex world. Going back to the YouTube channel, that was the whole point of this, was I wanted to be able to get my thoughts out to people, because I kept repeatedly getting asked the questions of what's this, how do I do this? And I was kind of a lot of the reason why I wanted to build this YouTube channel. And the second part as to big reason was there's I don't want to swear, but there's a lot of BS on from so many different content creators out there. A lot of shilling, a lot of scams, a lot of that you do get within cryptocurrency. So I also wanted to make the channel to separate the black from the white and be able to go, this is what it is. And that's what I try to do anyway on the content, and hopefully be able to get to a big enough position. I don't know if you have it in the States, but definitely here in the UK on Instagram, we have a lot of influencers who most definitely aren't traders, and I want to be able to get to a position where I can call these people out for who they are, because that isn't the world of trading, and that's what my channel is about. I want to introduce people to what it is about, how it realistically is, and hopefully teach people along the way.
Right. That's awesome. I can't say I can speak to the prevalence of Instagram influencers that are posing as traders, but there's certainly a lot of very bizarre Instagram influencers out there that probably need someone to call them out. So I'm with you on that piece.
Nice.
So how long have you been an investor?
Yeah, of course. So originally, going back to the story of myself, really, I didn't touch on that too much. Originally, I was a poker player.
Okay.
And I was all right. The highest that I ever got to, I competed in the European Poker Tour Barcelona leg last summertime, probably just over a year and a half ago. And I came 200 or something for a cash of just under $10,000, which was pretty nice. I played a lot of really good. I played a lot of online poker whilst I was at university as well. And during my time at university, I studied in sports science, and I hated every second of it. I couldn't stand it. I went to Loughborough University, and I'm not sure if you're aware of it, but it's one of the leading universities within the United Kingdom for sport. I'm a hockey player at heart.
Okay.
So that was the reason I went there, and I completely lost interest in my studies, and I found a lot of interest in poker. And along the same time of that, I was also learning to study Forex trading, because obviously they're very directly correlated in a lot of ways. When it comes to poker, a big part of that is risk management and understanding how to preserve your capital. And that taking it over to trading helped to build that foundation of when I started Forex trading originally. This is probably about 5 years ago now. And I was demo trading the accounts. And from there, after I was demonstrating the accounts, maybe 2 years, I started slowly turning over a little bit of profit on them. And I thought, right, maybe now's the time, especially as I had built up a bit of a portfolio from poker, maybe transfer some of that over to the trading aspect of it. And during my time at university, whilst I was doing the trading and the poker, I also got into crypto at the right time. I made the transition very nicely at the end of 2016, beginning of 2017, just after it beat its 1K heights. I could see I obviously understood what it was, but I wasn't trading it. And I saw it going past these heights of 1K and breaking its all-time highs. And I was like, wow, there must be really something here. And that's when again, instead of focusing on my studies, I then started concentrating on teaching myself Bitcoin, understanding this market. I decided to make the decision to switch out of Forex and move over to crypto. Mostly by luck, hands down, mostly by luck. And and then with everything, I've been very lucky. I hands down say I've been lucky with poker. I was lucky with transitioning over to crypto. And by the time I came to leave university, which was just over 2 years ago, I'm now in a position where I've been able to take this on full time. I did actually work at a financial advisor's for about 3 weeks, and then just straight dropped out of that, and went back to trading. Yeah.
Awesome. Well, so that's a really interesting point, and something that I had was thinking before we started talking about asking you about, and you've just provided a very natural segue. And that is that when it comes to investing, at least in, I'm gonna sound like I'm trying to sound more sophisticated than I actually am, so I don't mean to throw around terms incorrectly, but like paper markets, right? Like stocks or currencies or things that are not hard assets, as opposed to something like if you were going to actually buy and take possession of like gold and silver, or if you were going to buy real estate and invest in that, right?
Yeah.
In those areas, there seems to be you have closer control, you have just really more power in a lot of ways over what happens with that asset. Whereas when it comes to stocks and currencies and things like that, you're not really, I mean, unless you're unless you're a shareholder that's holds so much in a particular company that you can be on the board, you probably don't have a lot of actual power to exercise over the decisions that a given company might make. And so it feels to me kind of like gambling, and gambling maybe isn't really fair because that could mean slot machines, and I don't think it's like that. But poker is a really, really good kind of analogous thing to that. So would you compare, and I guess maybe there's a distinction between investing and trading. Would you say that's true?
Yes, 100%. Yeah, and we can get into that if you would like. Yeah.
Yeah, if you wouldn't mind, maybe how would you explain the difference between what it is to be an investor versus a trader?
Yeah, so I'm being an investor, and I am both. And I think before, like, the important thing with anything is your investment should always come first over your trades. And when we look at an investment, we're looking much longer term, and these are the assets that you can build under yourself, like having your own house, being able to pay off your mortgage, and then, you know, if everything goes to down pot, at least you can fall back on that. But your investments are stuff that you are putting, it doesn't have to be your money, but your time into, your resources into, and that's looking to build yourself, not just as a person, but building your portfolio up over a much, much longer period of time. So when I'm looking for my investments, you know, and we can go into Bitcoin here, I'm primarily a Bitcoin trader. I don't really trade the stock market. I used to trade a lot of Forex. Now, when it comes to trading, I only trade Bitcoin, but I also have my Bitcoins as an investment because I believe fundamentally in it, and I believe it will very much rise over time. So I have those Bitcoins that I just sit on, okay? And they won't be touched. They're in the background. And then I have, when I invest into the stock market as well, you know, I'm sitting on those for 5+ years. You have different strategies of what you can do through different, like ETF investing into different funds, or investing into dividend stocks where you get paid out that passive income. And, you know, with an investment, you're just there looking to just sit on it and, you know, just make money while you're sleeping. And that's kind of the difference with these. Now, when I trade, it's different to this because you're looking at a much shorter period of time. And when I make a trade, this will be much more comparing it to something like poker, because necessarily you can most definitely gamble when it comes to poker, and you can most definitely gamble when it comes to trading. But if you understand what you're doing, I wouldn't call myself, when I was playing poker, a gambler, because I knew I was playing a correct strategy. And with that strategy, yes, in many people's eyes, it might have been considered gambling, but I was netting myself long, consistent money. Because if you looked at it as a expected value over time, the strategy that I was playing was going to net me money in the long run. Now, obviously, luck is involved when you're playing cards, and luck is very much involved when you make a trade as well. You know, I don't hit every single one of my trades. You know, you might hit maybe 60% of your trades, 65% of your trades, but with trading, how it's different. You're playing what are called stops, and you're also looking for your take profits. Now, if I was risking, just keep it really simple and say $100 on a trade, but I was looking to reward myself with $200 because I was looking to hit that certain price in the market, say Apple stock or whatever it is, or Amazon. I think Amazon's trading at $2,500 per stock roughly at the moment. See, I thought it was going to go to $260. Okay, so I'd want to get one stock bought at $2,500, but then I might have a stop loss going, right, if it hits this price below that, I'll cut me out and I'll just take my loss on that. And that might be $50 underneath that price, so $2,450. Okay, and then if it hits that's fine. I lose that $50 on that trade and I'm out. But if I win that, and I win that trade 60% of the time, let's say, you know, in the long run, I'm netting myself money, and that's the difference with trading. You know, I will lose a lot of trades, but that doesn't matter because I've got the winning strategy of how I've been playing it, how you adapt it over time, very similar to poker, and you just look for that next trade. You know, if you bust out that poker tournament, if you lose that poker hand, you go on to the next hand. You know, and you play the cards, you play what you see in front of you, and then you don't need to get emotionally tied to it. Whereas with your investments, you're not so much doing this because you're looking much further down the line. You know, you're not having those stops on where you're going to cash out. And, you know, if it drops with investing, this is, you need to think of it as like everything is on sale, you know, because it's like walking into Ferrari or your favorite car shop. And, you know, if the stock market's down 30% on an investing standpoint, you should be celebrating, because it's like, how often do you get to go buy, I don't know, whatever it is that you want, and everything's 30% off on sale? You know, you just want to load up on everything. That's how you should be viewing your investments. Whereas with your trading, you have predetermined points of where you need to cut yourself out.
Right. Okay. So investing a much more long-term and potentially passive engagement versus trading as a much more active and involved.
Exactly.
Kind of
Yeah. And with trading, you're never going to really over leverage yourself. It's about making consistent but small wins, you know? And I think that's where a lot of people get very mixed up and why probably a lot of people don't become successful in trading. This is where poker taught me very well, is that they get very over leveraged into their positions, you know, and then they might lose 20% of their account, 30% of their account. And that starts getting very, very hard to gain back from. Whereas with me, I have just the cardinal rule. If I ever make a trade, I will never, ever risk more than 2% of my account on a trade. And that's just my trading account. So that isn't even considering my investments. So my whole total assets under management, it comes to like 0.3%, you know? So I'm only gaining very, very small wins. And that's where it's very different.
No, that makes sense. Well, and so, you know, yourself now as someone who does trading, I mean, to call it a job isn't really fair because you're not going to an employer in the same way, but it's basically, but it is the work that you're spending your time doing in order to generate an income. So
yeah,
I think there's a lot of misconceptions that it's like, oh, if I want to be a fancy stock guy or something, I just go on and find out that this company is going to explode tomorrow. And so I'm going to invest in it today and then sell it tomorrow and I'm done. And I've done, you know, I'm a millionaire overnight now or something.
Yeah.
And it's actually a much more consistent, engaged process that you're involved in that leads you to success. Not comparing it back to poker. You're not just winning on one hand, right? That's not what wins you the tournament, kind of thing.
Yeah, exactly.
At this point, you primarily invest in cryptocurrencies. And that's something that's interesting to me as an idea, because to me, it seems like on the one hand, they're a currency. So they're similar to dollars or pounds or euros or pesos or whatever. But then on the other hand, unlike those, which as we've seen, at least in the United States here recently, they can just be printed or
yeah.
they need. With cryptocurrency, while it is a currency, it also shares something in common with like gold or silver, where there's a finite amount of it.
Mm-hmm.
So you can't just print more or add more, you know, if it's needed.
Yeah.
So yeah, I mean, I guess what attracted you to cryptocurrency to begin with, and can you maybe kind of elaborate on those differences?
Yeah,
between...
no, of course. Yeah. No, of course. I kind of mentioned it earlier, where I first ever heard of Bitcoin. I can remember I was probably 15 or 16 and I was at school, and I can remember someone telling me about the deep web and how you can have this internet money to, and I think Bitcoin probably was priced at about $150 at the time, so I kind of gutted I didn't tell mum and dad at the time to go, yo, chuck some money in this.
Then you could have had that one big win and walked away, right?
Exactly. Then most definitely had that big win. So that was my first sort of encounter with Bitcoin. But then like I mean I was 16, 15, you know, I didn't really think about that stuff. I had different issues on my hand, and then as I said, then I moved into the world of forex, and that was just simply just trying to teach myself. I saw people trading, and I was like, oh, this is really cool. You know, I was playing poker, I saw the simple transition, and then over time with forex, I'm not really sure how I maybe started becoming more familiar with it, but the time that I was like, whoa, like there's something really here, because I was always tracking the different, whenever I would throw up my charts, you know, I'd see the prices of different things, and I could see Bitcoin one day, and I saw it like fly past 1K, and I was like, I don't know, I think it was like 1,200 or something, and I was like, hold on a second, like that was like 800 like a few months ago. What's going on here? That's up 50%. I then started playing focus in it, and actually started teaching myself fundamentally about what actually Bitcoin was. And then I went down what you would call the rabbit hole as a crypto investor, and someone inside of and just literally day after day, just trying to learn more, going, wow, this is absolutely amazing. Started fully actually teaching myself economics. I mean, the last time I fully was studying economics was at GCSE, but then I moved down, as I said, the sports route. Study sports science at university and stuff like that. So that kind of got put on hold. But then I was kind of like, wow, this is amazing. Understanding sort of like new monetary systems, understanding what the Federal Reserve, as you touched on, like printing infinite amount of money, what Bitcoin was. And then Bitcoin started just like, as everyone knows, the 2017 bull run kicked in, and Bitcoin went to 20K, and like there was just complete and utter just euphoria of just, oh my God, this is just going to go forever. And then I very much got caught up on the whole altcoin cycle, and then altcoins started booming through the absolute roof. Ethereum started just crashing up, and everyone was looking for that next best sort of alternative to Bitcoin. And I most definitely got hurt in that drop off as well. And I think anyone who says they didn't, I think probably aren't fully telling the truth on the full extent of that one. And then over time, I started studying altcoins more in depth. And I actually came to realize that I don't necessarily believe so much in the cryptocurrency space, more that I'm a believer in Bitcoin. And where a lot of people I know will disagree with my views on this kind of thing, but I would consider myself now much more of a Bitcoin maximalist, because I'm not so much a believer in the blockchain technology, which is what revolves around cryptocurrencies, what makes them cryptocurrencies. I understood, once I had better understanding of economics, that it wasn't so much the blockchain that was the powerful thing. It was that you couldn't produce more than 21 million Bitcoins. And then that, as that monetary system, and as that comparison to gold, as you hinted on, because it is so scarce, because we only have that 21 million, you know, there's nothing more scarce in the world. It's more scarce than gold. And I think if we compare that to something like gold, which I think gives it, I think when we gave gold its property of its value, you know, I think it's because it was such a scarce item, you know, and we could use that to interact. And that's why it started becoming as that sort of monetary system. And, you know, and I think that's what makes Bitcoin so powerful, because it has so many of those same properties of gold, but yet it does them so much better. It's more scarce than gold. You know, it's more diversible than gold. We can send it to anyone. I can send it to you within half an hour, you know, and it costs an absolute fraction of anything else that we can do. You know, there is nothing out there. There's no technology out there which is so disruptive, not just as a money, but just as a physical commodity kind of as itself. It's such a powerful thing.
Yeah. So I think, like I said, I think that the comparisons to gold are very interesting. You know, so with gold or silver or something like that, you know, you can obviously buy those things directly, or you can invest in like ETFs where you're investing in a company that buys those things, but then you're not really taking possession of it, right? So you're still kind of it's really just similar to buying, you know, any other stock. When it comes to Bitcoin, I understand that there are kind of similar offerings. Do you have any view on like, should a person, if they want to invest in Bitcoin, should they be getting their own digital wallet and investing in it that way? Okay, not going through some intermediary.
No, the problem is there is no ETFs around Bitcoin at the moment. They are working very hard on trying to build one, but the problem why the Winklevoss twins didn't get theirs approved, they on one big exchange called Gemini, they got theirs rejected. There's been many after theirs that have also been rejected because the cryptocurrency space can be very, very easily manipulated, and they can't build an ETF around a market that is so fragile in nature, and that's why it needs to grow in market cap before something like that happens. But even so, when an ETF does come, and the problem with investing into something like a Bitcoin ETF, because it will come one day, that will happen. The issue is if you don't hold your keys, there's a classic saying, not your keys, not your Bitcoins. And that very much means if you buy your cryptocurrency, you buy your Bitcoin on an exchange, know that you actually don't have access to those Bitcoins. And there's a very classic example. And back in 2014, 2015, there was the biggest exchange around called Mt. Gox. And what happened with Mt. Gox is that it was actually hacked for, I'm not sure of the exact number, but it made it go into liquidation, and it stole a lot of Bitcoins. And people to this day still haven't actually been paid back what they lost. And there's a big thing around it at the moment, but the whole issue there was that they left their Bitcoins on the exchange, so the exchange had custody of their Bitcoins. And this is why we need to, when we hold our Bitcoins, and very much as my investment standpoint, you need to transfer off the exchange. You need to hold your keys through something called a hardware wallet, so that way it's completely out of action of anywhere that can be accessed through the web, which hackers can have access to, because you can't get it through that third party intermediary through that exchange.
Okay. So yeah, if you don't mind, what is the difference between a software wallet or a digital wallet and a hardware wallet? I mean, I know what the difference between hardware and software are, but if you wouldn't mind elaborating on how that works specifically with relation to Bitcoin.
Yeah, of course. Well, I think it's important to understand how Bitcoin works, and to be able to sign a transaction for Bitcoin, you have something called your public key, and you have your private key. Now, your private key is the really important thing for you. So when I want to send my Bitcoins to Walker, let's say, I will have your public address, and this is kind of like your home address of where I need to send those Bitcoins to. And now to actually validate that transaction, I have to make that cryptographic signature, which is through my private keys, because they're directly correlated to each other. So for me to actually be able to sign that transaction, to validate it, to go out to you, I would have to therefore then sign it with my private key. Now, what hardware wallets do is they store your private keys for you, and they store it in something called cold storage. And when you have cold storage, it means it is offline. So it's just like storing it on your USB. And you hear many people back from ages ago who stored their Bitcoins and they lost their private keys, and that would have meant they might have stored it on a USB or wherever it was. It got thrown away in the rubbish, and now they don't have access to it. I mean, they have improved that kind of, but back then the custody solution was obviously a lot worse. So going into, so with the hardware wallet, what it does is it stores it offline for you. So when you then put it back into your computer, then it gives you that access back to your private keys. Then you can therefore then sign that signature. Now, when you have it in on an exchange, it's called in a hot wallet, or they also have other forms of wallets as well. And that's where they hold your Bitcoins in a big pool with everyone else's Bitcoins, and then they have accounts to try and obviously work out how much you actually hold within the different types of exchanges. Does that kind of answer your question?
Yeah, I think so. So I guess that was where I was kind of thinking, though, and I think you spoke to this, but so if I have this hardware wallet, I mean, you mentioned before, like maybe they had it on a USB drive, and the USB drive stops working or gets lost or whatever, and now they're just kind of it's like they threw away a pile of cash or something.
Yeah,
right?
yeah,
like,
of course.
They just lost the physical thing. But with the hardware wallet you're talking about, I guess, how does that differ from a USB drive? Like, what is the protection?
So,
yeah, hardware fan?
Yeah, there's different companies now called Ledger and Trezor, and I personally have a Trezor, but again, they're just as good as each other, really. It's like Nike and Adidas or whatever. And what these guys do is that they give you that hardware wallet. They have it on that USB, and then if you were to lose that USB, I think where you're trying to ask that, you have backup seeds for that, and you can store them in other places. You also also have other types of wallets which you can only make that cryptographic signature if you're accessed in 3 different locations. I think that's called Casa Hodder or something. But either way, these type of hardware wallets, if you were to lose that, you still have your backup keys that you can then leave in your safe away from. I would 100% obviously recommend leaving it away from where you store your hardware wallet. You want them in different locations, but then if you were to lose your hardware wallet, you can then put up into this backup seed into the software, because when you plug it into your computer, you'd need that software from Trezor or Ledger to be able to still access it, because it isn't just as simple as just plugging it into your computer, if that makes sense.
Yeah. Okay, no, that does make sense. It's funny that the backup solutions or best practices around cryptocurrency is actually just like the best backup practices for all data that you would have on a on a computer or something, you know, like multiple copies, separate locations, you know.
Exactly.
To jump back to away from crypto for just a moment, but back to our earlier conversation, kind of about what it means to be a trader. So would you say when you're looking at trades, and I guess maybe with cryptocurrency, I don't know, it's still the same thing, I think. Anyway, are you looking at trying to whenever you're looking at trying to anticipate where the value of it is going to go, whether that be up or down, and however you want to interact with that. Mm-hmm. But when you're trying to anticipate what the market will do, are you looking at, you know, like, I'm going to take it back to stocks because I have a slightly better understanding, although still very limited understanding of that. But like with stocks, it's like, you know, if you read about how to become a stock investor, they suggest that you go look at the financials of a company, right? So you go look at financial statements and evaluate those kinds of things. Is that the kind of evaluations you're doing as a trader, or are you more looking at the graphs of how it's been performing, and then based on what you're seeing there, making?
No, of course. Yeah. So what you're referring to when you look at the graph is something called technical analysis, and I assume that's what you mean by drawing all the lines on the graph, all those fancy, and you see that, and that is part of it, but you should never prioritize that. And that's what I think I try to teach on my channel as well on the YouTube. And that's where I want to call out so many people, is because they prioritize the lines so much. And when you prioritize technical analysis, I could chuck a million lines on the graph to say it's Bitcoin's going down, and I could chuck a million lines on the graph to say that Bitcoin's coming up. Most technical analysis signals aren't actually a good signal. They're neither a buy or a sell when it comes to realistically actually looking at price. Now, what's more important is to understand the fundamentals and the macro trend of what you're trading, because once you actually understand that narrative of the fundamentals of what's actually happening within that space, very much like when you analyze stocks, you'll be able to get a bars on which way the market should be looking to go. So when we use Bitcoin for an example right now, and Bitcoin's obviously been performing very, very well over the last coming weeks. I'm not sure if you've seen it, but it's been down very much from 3,800 or wherever it bottomed when we had that absolute catastrophic day, as well as the stock market. And then it's been very much been able to rise along with traditional equities. Now, when I say traditional equities, I mean stocks and ETFs and everything like that. Now, what I know fundamentally about Bitcoin is that Bitcoin is very much viewed as a risk on asset. And now, when it is viewed as a risk on asset, if the stock market drops, people aren't going to want to take their money out of the stock market and be able to chuck it into something like Bitcoin. Okay, that's a big issue. Okay, even though they are two completely separate things, which is going to mean that Bitcoin's price will also drop along with those traditional equities at the moment, because it isn't being proven as that sort of safe haven and that hedge against those traditional markets. Very much something like gold has very much been seen to do. So what that causes is we had, I don't know, I think we called it Black Monday or Black Thursday, and Bitcoin lost 50% of its purchasing power about a month and a half ago. And it was, the price went from about 8K down to, as I say, 3.5K or 3,800. And that shouldn't happen, but it only happens because people get scared. It's viewed as that risk on asset. People panic, so it drops. And now when those traditional equities start turning back around, now you see money start flowing back up into Bitcoin, because it's been very, very correlated to that. So that's kind of the macro trend, and that's the thing that you kind of need to be following when it comes to Bitcoin. And now also what's happening with Bitcoin is we have coming up literally in about 10 days or so, it's called the Bitcoin Harvening. And now with that, or the halving, however people say it, but what's happening with that is as Bitcoin gets mined and people get rewarded, I don't want to go in too deep about it because it's so much about it, but when Bitcoin gets mined, those miners who validate those transactions get rewarded by being paid new Bitcoins that come into the system. Okay, and as a way to combat inflation, what Satoshi Nakamoto did, the guy who invented Bitcoin, or a group of people we don't know, he basically scheduled every 210,000 blocks for the mining rewards to be cut in half. So we're going from 12.5 Bitcoins down to 6.25. Now, why this is such a, what you would see as a bullish event for Bitcoin, is because when you have that reduction in supply and you have economics, and I mean, it's a perfect example. When you have a reduction in the supply, but you have the demand that is still there, the price is going to rise. And I like to use an example which is really basic and say, if you have 5 rocks and you have 5 people demanding those rocks, so we're in equilibrium with each other because supply is equal to demand. Now, if we have that reduction in the supply and we say drop down to 3, but we still have 5 people demanding those rocks, the issue now is that we don't have enough rocks to go around. So what we need to do is increase the price. That way we can get back to that equilibrium state. And that's what markets always need to do. They need to get back to that equilibrium state of which there is a given price for. So what's happening with Bitcoin in a couple of weeks is that we're going to have that reduction in supply, but we're going to probably still have that same level of demand, if not more, maybe in years to come. So from a fundamental perspective and from an economic perspective, from a supply and demand feature, the price will rise. Now, people know this, and a lot of hype gets generated around the Bitcoin halving. So with traditional equities rising and with this kind of big event for Bitcoin coming up, you know, there's a lot of bullish sort of fundamentals, bullish sentiment. Now, what I want to do with that, so my bias is now long. So, and when I mean long, I'm thinking that the path of least resistance for Bitcoin is most likely going to be up, then down. Now, when I have that bias, I know that I want to be looking for long trades. I want to be getting on that side of the market. So I want to be accumulating Bitcoin, looking to sell slightly higher. So now this is where the technicals come in, okay? And now I'm drawing on the chart to try and find out which places Bitcoin might be priced slightly cheaper, and then where Bitcoin could be viewed maybe as slightly more expensively. And that's how you kind of should be using technicals to be able to complement it. It's kind of like having a Sunday roast, you know? And if the technical analysis, the drawing on charts, if that was your gravy, you know, it's not going to be a very nice dinner if you just poured gravy all over your plate, you know? So what you need to do with trading is you need to have a combination of everything, you know, and you need the technical analysis, because otherwise it's going to be too dry, you know, and that's what trading is about. It's being able to mix everything together and get that recipe, which then obviously you can use to, yeah.
So effectively, you know, you have, an understanding of Bitcoin and a belief, and I don't mean you know, just a made up belief. It's based on on information and a lot of research and education that you've done, but you have a belief of where you think it's going in a more, you know, macro sense or in a longer term direction. So that's why you're interested in getting into it, and then the technical analysis side of it you're using to, as you just described, to kind of supplement that. But the technical analysis on its own wouldn't be a driver for you to trade or not trade something. You would need to understand it.
Yes, completely. Yeah, and a good thing that I like to do when I trade, well, I don't really trade altcoins anymore because as I touched on it earlier, I'm not actually a big believer of altcoins. And I think in the long run, I think 99% of them are very much going to zero. And I think either way, I think Bitcoin's going so much higher than any other cryptocurrency out there, or a direct alternative to Bitcoin in a way that can somehow do it better. I can't see that happening at this current moment of time, and so that's basically going to put all other altcoins basically down to zero. So I try and stay away from trading altcoins, but where, again, from a fundamental and a sentiment position, when I understand that Bitcoin moves into a resistance, and that basically means that Bitcoin's price more expensive, people look to take out their profits. And what happens is a lot of times people take out their Bitcoin profits and move it into altcoins, look for that next best opportunity. They look for that next pump. What's that next thing that's going to move? So what that happens in Bitcoin terms is altcoins then, after Bitcoin pumps and then gets stuck at a resistance and holds off, then you tend to see that altcoins then get a sudden jump up, and you can be able to capitalize on those as well from that kind of understanding. And then again, you use the technicals to be able to trade it. But I don't so much do that anymore, more so because I'm trying to make more content for YouTube, so I try and stick just to Bitcoin at the moment. But I know that's also how you can play the market.
Yeah, well, you're very generous to explain all of that, and to explain the halving or the halvening or whatever it's called. That was actually one of the videos on your channel that I did watch, and so I would encourage anyone who's interested in knowing more about that to go to Luke's channel on YouTube, 10x Nation, and obviously there's a wealth of videos, but that video again is one that I've watched, and he has a very detailed breakdown of that, even more so than what he just provided. So thank you for sharing that.
Nice, thank you.
So you do think it's possible for all of the other cryptos to go to zero, but you don't see that really in the cards for Bitcoin.
No. So where my views is very much changed over time from where I've been trading this full time, as I say. Well, I've been in Bitcoin probably nearly, I don't know now, coming up 4 years or however long it is, for 3.5 years, but probably really since I started going full time in this and really understanding and having the full time to be able to analyze markets, I came to understand the difference with Bitcoin, and the perfect comparison here is with Ethereum. And now what Ethereum is trying to do, I mean, again, these are my views, and people can be different to this. The difference with Bitcoin is it's trying to be money, and in a lot of ways it's trying to be that digital gold, that store of value. Now, what that Bitcoin can tap into that market, and let's compare it to gold so many times. Gold has a market cap of 9 trillion, okay, and that's where you take all the gold in circulation. Now, if we look at Bitcoin, okay, and we look at it from a market cap perspective, we know that roughly, with all the money pumped into Bitcoin, it's about 150 billion, 140 billion. I'd need to look up the stats to say, obviously, it fluctuates so much as price fluctuates so much. But if we were to get to the price of gold, and in many ways I see Bitcoin as a better alternative to gold, so I don't see that as that far-fetched. So I definitely can see a world in the next 10 to 20 years where Bitcoin steals some of that value from gold, and if that happens, that moves Bitcoin into the trillions of market cap. And what we see there is if Bitcoin was to become as big as gold, say 9 trillion, don't think that's that unrealistic. That's 69 times more than at today's prices. So that the market that Bitcoin is trying to tap into is, in my opinion, a lot bigger than Ethereum, because where Ethereum is trying to be, it's trying to decentralize everything in a way and make decentralized web applications by instead of having that third party intermediary, where at the moment with Bitcoin, I mean, with the fiat system, we obviously have those banks as that middleman. Bitcoin doesn't have that. The issue with doing that with web apps, I don't actually think that's the correct system. And and when we have Facebook and we have Instagram, we can't have that decentralized system because it's making it too complex. We need that middleman to be able to hold onto our data and be able to use where we can trust their data for that. Whereas if we leave it up to lots of different nodes all around the world, and that's what's happening with Ethereum, it makes it very, very slow. And that's the issue with blockchains, and why I'm not so much a believer in blockchain technology, is that blockchains are very, very slow, and Bitcoin has a very, very long way for it still to go. Bitcoin is very, very slow, but it's having different things built on top of Bitcoin, like the Lightning Network, And what this does is a solution for off-chain scaling, and by that it's making Bitcoin a lot more scalable and be able to transact a lot more with it. But the issue with Ethereum at the moment, I don't see the killer application for it, because I don't believe in the world that it's trying to disrupt, because I actually think the world that with web applications, I believe it needs that third party. But whereas with Bitcoin, where I see that slightly different, is because it's trying to be money, and there is a fundamental issue with the current banking system, and there is a fundamental issue with inflation, and Bitcoin is an answer towards that. I'm not saying it's the right answer, but it's a solution towards that. So I believe in that much more fundamentally than I can ever do in something like Ethereum.
Would you recommend that someone introduce themselves into this world of trading and investing in cryptocurrency, or would you advise that they start in something like stock?
So when it comes to Bitcoin and why it's so powerful, I think everyone should own a little bit of Bitcoin. Now, I'm not saying a lot. I definitely do not get yourself over leveraged in this space, because Bitcoin is very, very volatile, and you see massive swings. But the thing is with Bitcoin is that it's a hedge against that current system. And with that risk to reward, okay, let's say we have $1,000 spare, and I think everyone at some point in time could be able to work up to be able to invest something like that, and if we invest $1,000 into Bitcoin, is it going to zero? Probably not anymore. It's been here too long. I can't see a world where Bitcoin's going to go to zero unless something catastrophic happens where we get a 51% attack on the blockchain or whatever. But every day that a new block is mined, that's just becoming less likely. So if we have the situation where we might lose 75-80% of our investment, we lose $800 on our investment, don't get me wrong, that absolutely sucks. But now if we look at the upside to Bitcoin, okay, so we know that if it is to become something as big as gold, that's 69 times more than at today's prices, okay? And if it was to become something greater than gold, and something like the world's reserve currency, which I honestly do not believe is that far-fetched in such a long term scale, where I'm talking about 40, 50 plus years, because to think that the US dollar is going to be here in 150 years time, I actually don't think I don't think it's going to be that. I think there's going to be a new monetary better system, whereas fiat was brought in back when the gold standard was introduced. Obviously, we transacted in gold and silver, and where banks came along and governments came along, they were right. How can we get dominance of this? And they've gone, right, you give us your gold, okay, and we'll give you this paper money, okay. And what's happened over time is they've manipulated that, and where it was better as it was easier to exchange as a peer-to-peer cash. Don't get me wrong, it was able to beat that as gold, but the issue is now that we've pressed that paper printer a few too many times, and you just have to look at the Federal Reserve now, how much you've printed, the 3 trillion, which is absolutely astronomical, whatever the number it is, but it's insane, because when we actually look at where they're getting their money from, when we press that paper printer, we're not necessarily creating new value. All we are doing by that is essentially, and as a way as I see it, and this is what the fundamental problem with inflation is for me, is you're taking money from savers, and the number one people who save the most are going to be the ultra wealthy, but you're also stealing a lot of money from the people who live paycheck to paycheck. Because when you print new money, essentially, if we have me and you, okay, and then we have the governments, we have 3 parties, okay, and we each have $10, okay, And now the issue with this is if the government print that button and go, right, we now have $20, but we both still have $10. What essentially they have done there, because the value has to remain at 100%, if you understand what I'm saying here. So we each at the start have 33% purchasing power. Now, when they've printed that money free of charge for them and given themselves $20, they've devalued our $10 stake. Can you see that? And they've taken their value off of us and they've given it to themselves. And then what happens now is they choose to redistribute it wherever they please. Okay. And the issue with that is very much I touched on, is by clicking that paper printer, you're not necessarily creating new value. You're taking money from the private sector, so the ultra wealthy who save the most, because that's where you're getting the most of the money from, and you're also stealing it from the people who live paycheck to paycheck, and then you're redistributing it out into the public sector.
No, that makes sense. So, something that you touched on with the halvening, is there, is that the Bitcoin miners are going to see literally 50% of the return that they're getting for the same work that they've been doing the whole time. Mm-hmm. So as such, does that mean that you think that there will be a significant reduction in Bitcoin miners?
Oh, yeah. So it's a very competitive space, and so Bitcoin miners are all based on energy. If because they have to take real world energy to be able to mine those Bitcoins, which takes a lot of energy. And this is a big problem with Bitcoin. I'm not saying Bitcoin's the savior and it doesn't have problems. It most definitely does. One of them being the mining. It takes too much energy. Now, with that real world energy, if you're a miner and you're producing at a low rate, so your energy and where you live is very, very high, the cost of it is very high, then obviously the profits that you're going to get back from being able to mine those Bitcoins and be able to solve those is going to be less than a miner who can compete somewhere in, say, like Iceland, where electricity is obviously very, very cheap. So now when we're going to get a reduction in that supply, it's going to have a lot of miners will lose their space, 100%, because they won't be able to compete with these other miners.
Well, and so does the reduction in miners, then that leads to a reduction in the amount of new Bitcoins that are mined? Does that have a negative impact on the whole thing? Or does that not even make any sense?
No, it does make sense. It does make sense. So what happens with Bitcoin, I'm not sure how often it is. It's a certain amount of blocks, okay? And so how a Bitcoin transaction works is when I send money to you, it gets put into a block, and then after that block's full, a miner mines that block. It happens roughly every 10 minutes or so, okay? And miners all around the world compete to be able to solve that problem and then be able to get paid those new Bitcoins, okay? Now, when there's a reduction in miners, okay, and we have the difficulty set at still this high level, okay, well, then it's going to be harder for those miners to be able to compete. So what happens in the system is that it's encoded within Bitcoin that I'm not sure how many blocks as I touched on, but after a certain amount of blocks, it actually it assesses the difficulty rating of the hash rate of how difficult it was to be able to mine those blocks, and then it makes it easier for you. So that way, if you have less miners competing for it, obviously harder to be able to solve the problem because you have less people doing it, then the system will be able to work that out after so many blocks have been mined, and then it would lower the difficulty rating for Bitcoin. So then for the next set of blocks, it's combated that way. Does that make sense? Mm-hmm. Yeah.
Mm-hmm. 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 Okay. So, if you touched on earlier, wanting to take possession of Bitcoin yourself directly. If someone wanted to, listens to this and goes out to 10X Nation and kind of educates themselves on how to get started with all this, is there anywhere that you suggest? And I don't anticipate that you have a paid sponsorship or anything, but is there anywhere you suggest people go to buy their Bitcoin or exchange their Bitcoin?
I'm not paid from anyone to do anything. I mean, at the moment, I'm actually being a beta tester for a new exchange, but I mean, I wouldn't recommend them because I don't know them well enough myself. So yes, I'm being paid to test their stuff, but I mean, I'm not gonna
Right.
if I don't know what they are myself. But who I personally use is Kraken, and I like Kraken. I would personally use Kraken. I would probably advise maybe against Coinbase. I would 100% advise against using it on your mobile phone. A lot of people buy Bitcoins through their mobile phone, and what people don't know is, and a lot of exchanges catch you out for, is they wrap up the fees on mobile phones when people use their mobiles. So if you have access to your laptop or a computer, buy the Bitcoins on the web, because you will get given a better fee than what you would do on the exchange. About 5 or 6 times, astronomical more. On your mobile, you get charged about 5 or 6 times more for just making that trade. Wow. Yeah, it's really bad.
That's crazy.
Yeah, it's really bad.
I had no idea. All right, then.
Yeah.
So do you see in Bitcoin trading, is there the same types of, like when it comes to stocks, I mean, obviously you can buy and sell stocks, but then you can also do shorts and do all these different options. Are those same options trading?
Yes, you can. So what happens when you trade Bitcoin, and as a trader, there's 2 different ways you can trade Bitcoin essentially. There's what's called spot trading, and now when you do a spot trade, you're physically buying the Bitcoins yourself, and then you could transfer them off the exchange and do with them as you please. And when you sell those Bitcoins, you're physically selling the Bitcoin itself. Now, with the stock market, and the stock market is very similar to this, you can physically buy the shares and you can own those shares. Or when you do what's something like CFD trading, and it's the same with Bitcoin. What this is essentially what's called futures trading. And now what happens with futures trading, why this is slightly different and why you can do a lot more with it, but also at the same time, a whole lot more risky, and you can also short with Bitcoin with this. But when you do a futures trade, you're essentially buying a contract that represents that Bitcoin. And then it's much more like a bet now, okay? Because I'm buying that contract off of someone else. And now with that contract, I'm betting against them. So if I'm long on the market, so I think it's going to go, or let's say I'm short on the market the other way, I'm basically selling them that contract, okay, because they're long in the market. And now I'm hoping that price drops, and then I can buy it back off of them at that lower price. So now when I do that, I basically take their money, because I make the difference on the split and they lose their money. So that's the difference between a futures contract and actually a spot trade. Now, why you can short that and why you can't short in a because when you're physically selling a Bitcoin, you can't. Yes, you can buy it back down lower, but with a contract you can do a lot more with it. And you can also do what's called leverage trading, which means you basically upfront only a little bit. Say I have $1,000 in the account, I can then trade up to 10 grand into the account and do a 10x on it, even though I don't have that money. But then the flip side to that is, if it only moves 10% now, I will lose all my money. It'll be cashed out for that. So that's how a futures and a spot contract, on a very, very basic level, obviously, that's how they work. And they do have those within crypto as well. And I go short on Bitcoin most definitely to be able to earn myself more Bitcoins in the process.
Gotcha. So you're involved in both types of trading, both the spot trading or the future side of it?
Yes, yeah, very much so. I mean, if I have the option to be able to make a spot trade, understand that the fees are cheaper on a spot trade, because a futures trade is more complex and you can do more stuff with it. So if I have the option to make a spot trade, I'll make a spot trade. But if for example, if I'm so confident that the market's going to drop and I want to be, or say I felt I was too overexposed long and I had too much waiting long, what you can do is essentially a hedge against the market as well, to be able to mitigate that risk, is you can enter a very, very small short trade. So that way, if it does drop, it enables to balance out your waiting. So, that's the benefit of being able to short Bitcoin. And how that works, as I said, is you put up that little bit of Bitcoin as kind of collateral against someone else, and then you bet it drops to be able to gain their Bitcoins off of them.
obviously 10X Nation is going to be the primary resource that you would suggest, and hey, I'm not making I don't say that flippantly. Again, the whole reason I reached out to you and wanted you to come on the show is because I think that what you're doing is awesome, and I think you've got a lot of great content. Are there any other resources that you would suggest that people check out if they want to get into investing?
If with Bitcoin, with Bitcoin specifically, there's a book called The Bitcoin Standard. I would 100% recommend if anyone wants an understanding of Bitcoin to go and have a look at that one. It is an amazing book. There's a couple of different podcasts that I've listened to over the years. Again, when it comes to Bitcoin, the Peter McCormack one, the What Bitcoin Did. Again, it's very much focused around Bitcoin, and that's a great place to start. Now, when it comes into the stock market and being able to understand those equities, a very good place is just starting off at Investopedia, and being able to understand what those different things mean. For all my research, I use Bloomberg, and that's being able to and just reading the news and reading financial news has actually been able to teach me a lot. It is a subscription of about £30 a month or whatever it is, but through those different news things, what I tend to find in a lot of ways that I actually taught myself a lot of this because I had no education in this space at all. When I didn't understand something from these news things, from what they were talking about, I would just Google it. I would just look it up on YouTube, and I found that is a great resource tool. So it's not so much somewhere to go and just be able to teach you everything, but
Sure.
When it comes to the stock market, definitely to be able to understand search terms and everything, 100% Investopedia is an amazing free source. For the news and stuff, I personally use Bloomberg. You can use free sources like Yahoo Finance. And if you don't understand anything, just go off. If you don't understand what that word means, a PE ratio or whatever they are, just Google them. They're all free sources. And then when it comes to Bitcoin, I would highly recommend the book, The Bitcoin Standard. There's also the for an easier, more beginners place, I would say the What Bitcoin Did podcast is actually a pretty good place.
Okay. Awesome. Well, yeah, it was funny whenever we were preparing, not you and I, but when I was preparing and I was talking to my friend, Chris Crabtree, who had reached out to you and kind of initiated all of this. He had said something to me about supports and resistances, and I had never heard those terms. And I was like, do you think I should ask him about that? And he was like, he talks about it in his videos, so I'm sure he knows about it. And then I went to your YouTube channel, and sure enough, the very first video that you uploaded is explaining what that is. So I mentioned that just to encourage people to really go out to your YouTube channel and check out what's there, because like I said, you've got, the really great recent video on the halving that's happening, but then you've also got more fundamental videos that are not just about, current events per se, but that are teaching these kind of fundamental things.
Yeah. Yeah.
Anything else that we haven't talked about that you wanted to discuss or chat about? I know we've been going for nearly an hour here, so I don't mean to take up too much of your time, but
no,
very interesting conversation.
I don't think I answered I was thinking about after I said, I don't think I answered a question you said about Bitcoin earlier, and it's why I think that everyone should have a bit of their portfolio in Bitcoin, and it's from a risk to reward standpoint. I think I just stopped speaking. I don't know what I was doing. I went off on a tangent, but why Bitcoin, in my view, is such a good investment, and why I think everyone should have a little bit of exposure in it. And it's very much from that risk to reward perspective. I'm going to go back to that $1,000 example that I was talking about earlier. We might lose 80% of our investment, but the thing is, we will be able to gain back from that. It will suck, but very much is something that everyone can gain back from. But now the difference is the upside far outweighs this, and there's no other asset which is going to be able to, from sort of that fundamental, the stock market, yes, there's going to be a couple of those stocks, but not kind of as big as something like Bitcoin. It's much more of a crapshoot with those little penny stocks or whatever you look at. Now with Bitcoin, from that perspective, we could still 69 times plus from today's prices, and if we invest $1,000, that's 68 grand now, after like 20 years or whatever, 15 years or whatever our view is on that. Now that really does actually becoming life-changing money. Now you can put that deposit down on that house. You can do whatever it is. But when the risk now is we might lose 80% of our investment. We lose that $800. Don't get me wrong, it would absolutely suck to lose that. And if Bitcoin loses loads, I'll lose loads, and that's absolutely fine. I'm happy to do that, but understand that I know that the risk to reward is there. And when it comes to investing, you shouldn't just stick it all in Bitcoin. Now that's again something I try to teach on this channel, and that's why I also focus on stocks and teaching about equities and different things as well. You need to diversify your portfolio and be able to get invested into the market in not just Bitcoin, but in different things, because then if they start performing well, obviously you have that passive income, be able to save, be able to keep directly investing into the market, and be able to consistently over time, just save that $25 a month, save that $50 a month. I think everyone can do it. It's just having the will to do it. And then once you start doing that, maybe put $20 into Bitcoin, $30 into a stock that you like Apple. And then over time that builds up, and especially with stuff like dividend investing, where you get paid out that passive income, in 10 years time, you're suddenly, where you've been saving that $50 every single month, you've saved that $500 a year, $350 a year. Now that investment is no longer worth that, because you've invested it in Bitcoin, it's gone up 10x, and you've also invested in the stock market and being paid out those dividends. In 10 years time, that money's now starting to become kind of life-changing money in a way. And I think it's something that everyone can do. It's just having the patience to do it. And I think that's really an important thing. And to not go to trading. A lot of people, I know I said that's weird saying that I'm a trader, because if you don't understand what you're doing, then it becomes gambling very, very quickly. And this is why I say investing is so much more powerful than trading, and you should always prioritize your investments, because they're from that fundamental perspective. And then I try to just be able to earn myself that little bit more. You shouldn't be looking for that jackpot trade. You should be looking for that jackpot investment, which you can sit on and be able to just stand the test of time with.
Yeah, no, I think that's brilliant advice, and I think that makes a lot of sense, because again, like we talked about earlier, it's kind of the long-term or the more passive versus the more short-term and active. And the truth is that with investing, like you've just kind of described, you can maybe something goes down, but if you're in it for a longer term, you can ride it out through the end where it goes back up, right?
Yeah.
And
there's a great saying that it's dumb money isn't so dumb, and smart money is a lot more dumb than you might think. And smart money being that trading where the people are looking to be smart and be able to make those trades. That's not the game. The game is to be dumb and just stick it into something and sit on it and hold. That really is. And then if you understand the markets well enough, teach yourself over time, then be able to put on those little trades, like I do. But again, that shouldn't be your priority.
Yeah, well, and again, if you're working if you've got your day job like I do, I've got a day job and the podcast, right? So my time is limited. So if I try and jump in and I want to be this active trader, and I'm going to be Michael Douglas from Wall Street or something, and it's like, you're not, because there are people who are doing this full time. Yeah,
exactly. Well, I have all day to look at the markets, how much more of an advantage will I have over the average Joe who's just thinking, oh, Bitcoin's going to do this, or the stock market's going to do this. I've had all day to look at it. I probably, and that's where the catch is, and that's why people, I know it could be tempting because people see all this, but that it's really important to play do the dumb money, and that's why I want to call so many people out on it, because people who say that they're traders, they're not traders, and these signals groups that say, oh, buy here, sell here, it's not that simple. Trading is so much more than just having an entry, a sell point, a stop point. You have to actively manage your trades. There's just so much more to it. We've hardly even scratched the surface on this podcast, so hopefully I could come on another time. I've absolutely loved it.
Yeah, I'd love to have you again, man.
Yeah, thank you. Yeah, it's been absolutely awesome. Smart money, a lot more dumb than you might think. Dumb money is much more smart. Invest the dumb money.
That's good. That's good. Well, Luke Appleton, thank you very much for joining the show today. Again, the YouTube channel is 10x Nation. I cannot recommend it enough. And of course, in the show notes, we'll have links directly to that. So anyone that wants to check it out, if for some reason you're not able to Google 10x Nation and find it on your own, we'll have a link directly for you to the YouTube channel. Luke Appleton, thank you so much for your time.
Cheers, mate.
All right, folks. Well, that's going to do it for the show today. Thank you so much again to Luke Appleton for joining us all the way from the United Kingdom. And thank you again to Misha for providing the music. And as always, thank you, listener, for listening to the episode today. I encourage you to also check out my other podcast, Pick Up Your Sticks, which is co-hosted by myself and Brett Lindley. Pick Up Your Sticks is a podcast about why gaming matters. And we're talking about video games, although we do talk about board games and tabletop a little bit, but primarily a focus on video games. We do news and reviews, but again, really try and explore the emotional connections that we have to games and again, frankly, just why it matters to us. You can find Pick Up Your Sticks everywhere podcasts are listened to, so wherever you're listening to The Walk Show, you can find Pick Up Your Sticks. I hope you guys have a great week. Stay up.